Hello, students. So, after watching the first lecture, you have understood that how a partnership is formed, what are the various provisions of the Partnership Act, what happens when there is no partnership agreement, in case of verbal partnership, what conditions apply. Now, in this session, we are going to discuss about what happens when there is profit in the business, what happens when the partners ask for interest on capital, ask for salary, commission, what happens when a partner keeps on drawing the money. So all these conditions we will see along with the format of profit and loss appropriation account, partners capital account, and we will also see the journal entries. So let's begin our session. Now, dear students, you can see this photograph over here that three friends came together and started doing a business in partnership format. So, you have made a profit. Now, what? A survival guide to partnership fundamentals, splitting the cash, and very important, not ruining your friendship. So, now what happens when there is profit, what happens when partners demand for so many things, and how we are going to treat this in our books of accounts. Now, the dilemma, who gets what? अब साथ में बिजनेस तो कर दिया, बट एक्सपेक्टेशन क्या थे? किसी हम साथ में बिजनेस करेंगे, बहुत मजा करेंगे. You launched a startup, survived the year, and actually made a profit. Recorded in profit and loss account. Congratulations. But now comes the hardest part of business, that is dividing the pie. How you will divide this profit. Now, reality क्या है? यू कैन सी, सोचा था कि लाइफ ऐसी ही होगी, साथ में बिजनेस करेंगे, बहुत मजा करेंगे, बहुत मजा आएगा, पर जैसे ही पैसा आ गया लाइफ में, कलेश चालू, सारे फसाद का जड़ पैसा. नाउ यहां पे वन ऑफ द पार्टनर, द हसलर यानी हार्ड वर्कर, स्ट्रगलर, ही सेड, आई वर्कड 80 hours a week, I deserve a salary. Then there is an investor partner who invested money. I have put in 5 lakhs. I want return on my capital. And yes, there is a spender who keeps on borrowing money from the business. So different situations have now arose in the partnership, and we have to deal with all of them. The solution: we need a legally binding, mathematically perfect system to distribute the profits. Enter partnership accounting. Now, if there is no partnership deed, we have already seen this in the previous session, that if there is no partnership deed, we did not sign anything, then what happens? Then Indian Partnership Act 1932 steps in, and profit sharing ratio will be equal no matter who worked harder. Interest on capital 0, not allowed. Interest on drawing 0, not charged. So if there is no agreement and a partner keeps on withdrawing the money, business will not be able to charge interest from the partner. Salary commission also 0, not allowed. But there is always an exception. The exception is interest on partner's loan. So partner giving loan to the firm, then 6% interest per annum will be allowed as a charge against profit. We will see this. What is a charge? what is appropriation in our lecture going further. So now in 11th standard, in final accounts of sole proprietorship, you have studied trading account, profit and loss account and balance sheet. So from trading account, you will get gross profit, gross loss, which is transferred to profit and loss account, where you will get net profit, net loss, which will be transferred to partners capital account in the balance sheet. But now in 12th standard, in partnership final accounts, there are some changes. The changes are, now trading account, as it is, you will be making same. From trading account, you will be able to find out gross profit or gross loss. Then profit and loss account. Profit and loss account for net profit or net loss, but now newly introduced in your 12th standard is profit and loss appropriation account and partners capital account. So what happens? Try to understand the flow. The flow is, from trading account, what you will get is gross profit, which will go to profit and loss account. From profit and loss account, you will get net profit, which will go to profit and loss appropriation. Now, profit and loss appropriation. So, what is the meaning of the word appropriation? So, appropriate karna means distribute karna. Distribute between whom? To distribute between the partners. Because in sole proprietorship, there were no partners, this account was not there. But now, when there are partners, so we are going to distribute the profit between the partners. And then, once the profit is found out, which we call it divisible profit or net divisible profit, this profit will be transferred to partners capital account. We are going to see today the format of P&L appropriation, partners capital, and then the balances of partners capital account will be transferred to balance sheet. So basically, there will be 5 formats in partnership final accounts. But in this chapter, we are going to see the additional formats from the previous year, that is from 11th standard sole proprietor. So we are going to see in this chapter how we prepare a profit and loss appropriation account and how we will prepare partners capital account. Also, we'll be seeing different type of capital account, which is known as fixed capital account. Now we'll see that later on. Now, before we understand profit and loss appropriation account, it is very important for us to understand the difference between charge and appropriation. So I'll just go back to the previous slide. What all goes to profit and loss account is known as charge. And what all goes to profit and loss appropriation account is known as appropriation. But conceptually, how they are different. Say, for example, in your office, you are getting electricity bill. In your office, you are getting internet bill. In your office, you are getting municipal taxes. In your office, you have to pay rent to the landlord. In your office, you have to pay salary to the staff. Now, whether your business is making profit or loss, you will have to pay these expenses because they are not bothered whether you are making money or whether you are losing money. They have to get what they rightfully deserve. So, government will say, pay us electricity bill. Internet broadband services will say, give us internet charges. Landlord will say, give me rent. If I say, I am not making money as an entrepreneur, how will I pay it to you? No one is going to listen to me because they will say, that is not our lookout. You are entrepreneur, you get the rewards, You take the risk. We should get what we deserve. So, such expenses are known as charge. So, whether there is profit or loss, you will have to pay those expenses. They are known as charge against profit. So, profit ho ya loss ho, we have to record them in our books of accounts. But once you find out the profit, this profit is to be distributed between partners. That is known as appropriation. Now, related to partner, there are two very important points which we call it very important payables or very important point payable because business has to pay. Say, for example, rent. Now, we are three partners and we are using a property owned by one of the partner. So that partner is charging rent to us, rent to the business. So business has to pay the rent, whether business is making profit or not. So this rent paid to a partner, although it is expense of the business related to a partner, but still it will be considered as a charge. Similarly, interest on partner's loan. A partner giving loan to the business. So in that case, this is considered equivalent to a loan taken from outsider. So we will have to pay the interest. So business will have to pay the interest whether business is having profit or loss. So very important, although interest on partner's loan is related to partner, we will have to give, the business will have to give this money to the partner. 6%. I hope you all remember the previous lecture and the previous slide that if nothing is mentioned, then interest on partner's loan is 6%. Now, all these charge will be recorded in profit and loss account and all the appropriation will be recorded in profit and loss appropriation. So, even if interest on partner's loan, rent paid to partner are connected with partner, they will still be recorded in profit and loss account. You can see this diagram, the profit waterfall, profit and loss appropriation. So net profit from profit and loss account. Now it is coming this flow of water from profit and loss account. This profit, it gets diverted to general reserves. Then it gets diverted to interest on capital. So from this profit, some amount is transferred to general reserve, some amount is transferred to interest on capital, then salary and commission to partners, and then whatever is left, it will be divided between the partners. You can just have a view. Okay, the flow of profit from profit and loss account diverted to general reserve. From this, interest on capital is given, then again from this partner salary commission is given, and then what all is left, it will be distributed between partners in profit sharing ratio. Yes, what else would be added over here? What else would be added? Interest on drawings. So interest on drawings will be contributed by the partners in the business. Now, charge versus appropriation. Now, this is a very important theory question. This can come in your exam, and it's also a very important concept for you to understand and know for your further accountancy chapters. Now, charge against profit, expenses deducted to compute net profit or net loss. Appropriation of profit, as I told you, it's a distribution of profit available, provided charge against profit are those expenses under all circumstances, irrespective of profit or loss. And over here, appropriation of profit is distribution of profit. When can the distribution happen? When there is profit. So no profit, no distribution. I would just like to highlight that in 11th standard you studied a chapter, reserve versus provision. So provisions were charged against profit and reserves were part of profit. So what is part of profit? If there is profit, there will be reserve. If there is no profit, there will be no reserve. So similarly, appropriation only if there is profit. Where are the charges debited? Debited to profit and loss account. And here debited to profit and loss appropriation account. Now, very interesting, because we are studying the chapter partnership. Rent paid to partner, very important. Interest on partner's loan and manager's salary, everything will be recorded in profit and loss account over here, in profit and loss account. And interest on partner's capital, partner salary, commission, I'll also add over here, transfer to reserves, everything will be transferred to profit and loss appropriation account. So very important difference between charge and appropriation. It can come in your exam. I will share this material with you, so don't worry, or you can take a screenshot of this. Now, profit and loss appropriation account. Now you have already seen in the previous slide the flow of profit and how it gets distributed. But in this slide, you are going to understand what is the characteristics of a profit and loss appropriation account. Now, it is a nominal account, very important. So debit all the expenses and losses, credit all the income, gains and profit. It is an extension of profit and loss account. It shows distribution of profits amongst the partners. In what ratio? In profit sharing ratio. What if nothing is mentioned? Then it will be distributed equally. And rule, debit all expenses to the firm, which is salary, IOC is interest on capital, and credit all income to the firm, IOD is interest on drawings. You can see the flow. So P&L account, net profit to profit and loss appropriation account. Now, we will be discussing few journal entries before we go to the format of profit and loss appropriation account and partners capital account. Now you can see over here, net profit is transferred to profit and loss appropriation account. So everything which is appropriation of profit will be transferred to profit and loss appropriation account, starting with net profit transferred to profit and loss appropriation account. I'll just explain it over here. Say for example, this is a format of profit and loss appropriation account. If there is net profit, it will be transferred on the credit side. So by net profit, where does net profit come? It will come on the credit side, and we will write over here, transferred from profit and loss account. So this net profit is transferred from profit and loss account. Where it is transferred? Profit and loss appropriation account. So what's the journal entry? Directly you can make the journal entry, profit and loss appropriation account will be credited and profit and loss account will be debited. So very simple entry over here, profit and loss account debit. So we will close profit and loss account and transfer the profit to profit and loss appropriation. So entry is, dear students, you need to remember all these entries. It can come in exam, high chances. So profit and loss account debit to profit and loss appropriation account credit. What if there is a loss? Then this entry will be reversed. So profit and loss, in case of loss, profit and loss appropriation account will be debited, because then we will write over here to net loss, and then profit and loss account will be credited. So this is the first entry. Now very interesting, as you have seen, three partners doing business together, and one is a hustler, hard worker, and other is an investor. So rewarding the rich friend. So he looks like a rich friend. Okay, it's a subjective, but let's assume he is a rich guy and this person has invested money. So step 2, rewarding the rich friend, that is interest on capital. One who has put in money will always ask for interest. Now interest on capital is calculated on the opening capital. My dear students, this is one of the very important point. Interest on capital is calculated on what capital balances? It is always calculated on the opening capital. Please don't forget this. Please don't forget this. There are very complex questions where closing capital balance is given, rate of interest is given. So you have to first find opening capital, then only apply the rate. So be careful. Interest on capital is calculated on the opening capital. I'm saying this again and again so that it goes in your mind. Now, what is the entry for interest on capital? As you know, for the firm, you can see over here, for the firm, this person has invested money in the firm. So firm will give interest to this person. So for the firm, interest on capital is an expense. So entry will be, let's hide this rich person for a while. Entry will be interest on capital account debit. Why debit? Because it is an expense for the firm. It is an expense for the business. Two partners capital or current account credit. Now, what is this current account? Is there some current passing through partners? No, it is a different way of recording the capital and the accruals in the business. So we will see that later on. As of now, you just remember the entry, partners capital or current account. Now, as you know, all expenses or income are to be closed and transferred to profit and loss account, and in case of partner, it is to be transferred to profit and loss appropriation account. So we pass the entry for allowing the interest on capital to partners capital or current account, and then we close interest on capital account. So we will transfer this to profit and loss appropriation account. So entry will be P&L appropriation account debit to interest on capital account credit. So this is the entry for interest on capital. You have to learn this. This can come in the exam. How it is reflected in P&L appropriation account and partners capital account we'll see in the further slides. आगे की slides में वो सब हम देखेंगे. See, pro tip, once again, always calculate interest on capital on opening capital. Very important. If given closing capital, then what? Work backwards, add drawings, deduct profits, find out opening capital, and then calculate interest on capital. We'll see this all in detail separately when we do sums related to this. concept. Now, there was a rich lad, so the rich friend you can see over here, but now there is one partner who is a greedy friend. You can see this partner, okay, buying expensive stuff, Gucci, Sephora, okay, and keeps on taking money from the business. You can see rupee, negative, red. So money flows from firm to the partner. Now, what happens when partners withdraw cash for personal use? The firm charges them interest. It is an income of the firm, so it is credited to profit and loss appropriation account. So just like a rich partner investing money asks for interest on capital, now the firm is giving money to the partner, so firm will charge interest. Firm will charge interest on the partner and recover the interest. And that is why interest on drawings is income for the firm. It is an income for the firm. I hope you are able to understand this concept. Okay, these photographs are presented over here so that you understand that over here from the firm this partner is withdrawing for personal use. So what happens? Why should business have a problem? Partner may say it is my money, I want to withdraw. But as discussed in the previous session, that if partners keep on withdrawing money from the firm will go out of cash and then there can be crisis and firm will then have to borrow funds from outsiders or again take money from the partners. That is why just like capital is invested in the business, interest is given, there is a charge on drawings which we call it interest on drawings. Now the journal entry is very simple. You always have to make the entry. You don't have to mug it up. No rotify. रट्टा नहीं मारना है, गोखना नहीं है, अकाउंट समझ के करना है. Okay, that is why I am here. Okay, interest on drawing is income. So we credit the income and we debit what? Partner's capital or current account. What was the entry for interest on capital? Interest on capital account debit to partners capital or current account credit. So the entry for interest on drawing will be reverse. Partners capital or current account debit to interest on drawing account credit. Interest on drawing will be transferred where? It will be transferred to profit and loss appropriation. So transfer entry will be interest on drawings account जो पहले credit था वो हो गया debit and profit and loss appropriation account credit. Again, very important point. Now, this point is very important. The 6-month trap. If the rate is given as percentage, but the date of drawing is missing, then you must calculate interest for exactly 6 months. Now, if the amount of drawings is given, say for example, 60,000 were drawn during the year, but date is not mentioned. So we don't know how this 60,000 are withdrawn. It is very reasonable to assume that drawings does not happen lump sum. Drawings happen evenly every month because when owners have invested their money in the business to meet their monthly expenses, they keep on withdrawing money monthly from the business. So that is why if no dates are given, then what all rate of interest is given, we have to calculate the interest only for 6 months. Keep this in mind, very important for sums. Now, after charging interest from interest on drawing from partners and after giving interest on capital from our net profit, we want to save ourselves for a rainy day. So what happens typically? See, the moment the business starts making money, Okay, the partners would like to take that money, enjoy that money. So all partners would like to take the profit back home, spend it, buy gifts, buy luxury items, use that money. But then what happens if partners keep on withdrawing all the money, and then if some crisis come, the business will suffer, because you all know that finance is the blood of the business. And what happens if the blood is always pumped out of your body? Then we will fall sick, we will fall ill, we will not have that immune to fight diseases. So, what do rational partnership firms do, or sensible partners do? That is, from the profit, they will always keep aside some money. From the profit, you can see that some amount is transferred to this piggy bank, which we call it a reserve, यानी खराब समय का साथी. This amount will now be retained by transferring a part of profit to reserve, so that this amount stays in the business. Now, how do we pass a journal entry for this? Very simple. Decrease the profit. So, P&L appropriation account debit. Increase the reserve. So, reserve account credit. Very simple. So, the entry will be transferring to reserve, profit and loss appropriation account debit to reserve account credit. Now, what all is left? So, received interest on drawing, paid interest on capital, paid salary, bonus, commission to partners, transferred a part of profit to reserve. Now, what all is left will be distributed between partners. So, entry for that will be profit and loss appropriation account debit to partners capital or current account credit. This will be distributed in what ratio? In profit sharing ratio. Now, if there is a loss, then this entry will be reversed. So, what all entries we have seen so far? We have seen entry for transfer of net profit to profit and loss appropriation account. That is, profit and loss appropriation account will be credited and profit and loss account will be debited. So, P&L account debit to P&L app account credit. Interest on capital account debit to partners capital or current account credit. Profit and loss appropriation account debit to interest on capital account credit. Then interest on drawing is our income. So partners capital account debit, interest on drawing account credit. Interest on drawings account debit to profit and loss appropriation account credit. And then if there is salary, bonus, commission, again similar entry, they are expense. So salary, commission, bonus, remuneration account debit to partners capital or current account credit, and then profit and loss appropriation account debit to salary, bonus, commission, remuneration account credit. Thereafter, what all is left? Out of that, we transfer some amount to reserve. So, profit and loss appropriation account debit to reserve account credit. And then at the end, we are waiting for that moment कि अब जो बच गया चलो ले लेते हैं हम. So then the final entry, profit and loss appropriation account debit to partners capital or current account credit. Now, the format of profit and loss appropriation account. Now, debit outflow from the pool. So, debit the expenses, credit the income. So, as discussed, profit and loss account, by profit and loss account net profit. You can also write by net profit in the bracket, net profit transferred from profit and loss account. By interest on drawing, you can see green. So increase in profit, and over here interest on capital appropriation, decrease in profit, partner salary commission, reserves, and then profit transfer to capital or current account. In what ratio? Profit sharing ratio. So the entries, I hope you are able to get the entries. P&L appropriation account debit to interest on capital account credit. P&L appropriation account debit to partners salary commission account credit. P&L appropriation account debit to reserve account credit, and then distribution of profit and loss appropriation account debit to partners capital or current account credit. Similarly, the first entry what we had seen, P&L account debit to P&L appropriation account credit, and interest on drawings account debit to P&L appropriation account credit. Of course, there is a difference, my dear student. These effects are of the transfer entries. Okay. This one is the only solo entry P&L to reserve, but these are all transfer effect of transfer entries. But where does the main entry go? So the main entry goes to partners capital account. Now, from where we will start the partners capital account? The partners capital account will start with the opening balance, and generally or most of the time it will be a credit opening balance. Very rarely there will be a debit balance. So let's ignore this for now. Okay, let's ignore this. Okay, now you have opening credit balance. Along with that, drawings which are made during the year, the journal entry pass will be drawings account debit to bank account credit, drawings of A account debit to bank account credit, drawings of B account debit to bank account credit. So at the end of the year, the balance of drawings account is closed and transferred to capital account. So over here, you can see two drawings out of profits. Now, what is out of profits? That is the drawings what we are making every month. But there is also cash and bank account capital withdrawn. There is also cash and bank account additional capital. Now, we are already having opening balances and we are in need of funds. So, we introduce capital in the business, and from the capital what we have in our business, what we had invested, what we have brought for doing the business, if we are withdrawing anything, then we write it separately, capital withdrawn. Remember the entry, interest on capital account debit to partners capital or current account credit. So here comes on the credit side by interest on capital. I will give you a very interesting trick, my dear students. हमेशा याद रखना, कैपिटल के बैलेंस के नीचे इंटरेस्ट ऑन कैपिटल एंड ड्राइंग्स के नीचे इंटरेस्ट ऑन ड्राइंग्स. Okay, so capital credited, interest on capital credited, salary expense in profit and loss account. So debit profit and loss appropriation, again credit over your partner's capital or current account. Now, after all these effects, finally what profit or loss we get, that will be also transferred to partners capital or current account. So by profit and loss appropriation account, if there is profit, if there is loss, then it will be to profit and loss appropriation account if there is loss. Now what happens? Obviously you can't have both, so let's forget this for a while. Now at the end, you will balance the capital account. Generally, credit side will be more than the debit side, and then you will have the balance. Say March 31st to balance carried forward. what all balance you get. So this is the closing balance of this year. It will be the opening balance of the next year. So 1st April by balance brought forward. And this balance, my dear students, this balance will go to the balance sheet. So we can make individual partners capital account or we can make columnar. So if there are two partners, we will have column A, column B, column A, column B. So this is what is the flow of profit and loss appropriation account to partners capital account, and then from partners capital account the balances are transferred to balance sheet. In this lecture, we have seen the difference between charge and appropriation, which is very important, the flow of net profit to profit and loss appropriation account, journal entries for interest on capital, interest on drawing, salary, bonus, commission, remuneration to partners. Then we have seen how profit is distributed between the partners. We have also seen the format of profit and loss appropriation account, and then the format of partners capital account. In the next session, now we will start with few practical examples on various concepts of partnership. So till then, keep revising, keep studying, keep working hard for your super successful career. Bye bye.